Right, think about this example. Those are normal transactions happening in the business organization. You have to know how to record those kind of transactions by using accounting equation. It has given following transaction and events took place during the month of March 2021 of Janith Enterprise. Think about Janith Enterprise. There are 10 transactions it has given required to records by using accounting equation. Think about basic equation, assets equal liability plus equity. Sometimes it has given assets separately, as well as liability also sometimes it is given separately. Think about this equation. This is accounting equation. Assets equal liability plus equity. This is a basic equation. And effect for equity, there are 4 parts: income, expense, and additional capital, as well as drawings. Therefore, there are 4 things effect for equity. If it has given equity like that separately as a capital and retain earning, effect for income and expense should be recorded retain earning column, and additional capital and drawings, it effect should be recorded under capital column. And given asset also separately: property, plant and equipment, stock, trade receivable, and cash. As well as liability also given separately: trade payable, other payable, as well as loan. Now try to record those kind of transactions by using these equation. Think about first transaction. Just given Janith is owner, invested 500,000 cash and rupees 3 million worth of motor vehicle as a capital to the business. Think about capital introduced by owner, cash as well as motor vehicle. Therefore, think business point of view, cash increase 500,000, therefore plus cash 500,000. Effect for cash increase 500,000, as well as motor vehicle part of property, plant and equipment, land, building, motor vehicle, it effect should be recorded property, plant and equipment schedule column. Therefore, property, plant and equipment increase 3 million. Motor vehicle part of property, plant and equipment. Therefore, both value effect for capital. Therefore, under capital column should be recorded total value. Right here, record values in 1000. If it has given big value, record values in 1000. Therefore, here take values in 1000. 30 can be cut. Record values in 1000. Therefore, rupees 30. Property, plant and equipment increase 3000. And cash increase 500. Invested by the owner. Therefore, total value effect for capital increase 3,500. Values in 1000. If it has given big value, those are can be disclosed values in 1000. And second transaction, it has given drawings. Obtain 20,000 worth of goods and 30,000 cash from the business for personal use. That is a drawings. It has given stock drawings as well as cash drawings. Think about stock drawings, effect for stock decrease. Second transaction, 20,000 worth of goods. Therefore, it is effect for stock decrease. Record values in 1020. And cash drawings 30,000. Cash also decrease 30. And drawings, it effect should be recorded under capital column. Think equity given separately, capital and return earning. Therefore, under capital column should be recorded 50 minus drawings. Therefore, additional first one, think about capital introduced by owner, cash as well as motor vehicle. And second transaction, drawings. And third one and fourth one, think about third transaction, loan obtained 800,000. Loan obtained 800,000. It is effect for cash increase. Cash increase 800 as well as loan increase. Loan is a liability. Therefore, liability also increase 800. Cash increase and loan increase. Loan is a liability. And fourth one, very important. Think about fourth transaction. Rupees 50,000 loan installment has been paid. And it is included interest 10,000. Think about loan obtained and loan paid. It has given 50,000 loan installment has been paid. It is included interest 10,000. It means as a loan paid only 40,000. 50,000 paid in cash, but it is included loan interest 10,000. It means as a loan paid only balance part 40,000. But paid in cash, therefore effect for cash decrease, cash minus 50,000. Record values in 1,000. But it is included interest. It has given interest 10,000. Interest is expense. Expense effect for equity. But given equity separately as a capital and return earning, income and expense, its effect should be recorded retained earning columns. Therefore, loan interest is expense, effect for equity decrease. As a loan paid only balance part. Therefore, decrease loan only 40 balance part. 50,000 paid in cash, but it is included loan interest. Interest is expense, loan interest. Therefore, effect for retained earning decrease. Equity given separately. Under capital column should be recorded only additional capital as well as drawings. Think about transaction of 5. Rupees 60,000 worth of rent expense for the month of March 2021 was not paid. It has given information for the month of March, but rent expense not paid. Paid or not, we have to consider as expense. Reason, rent expense relevant for this month. Think about transaction of 5. 60,000 worth of rent expense for the month of March 2021, but not paid. Paid or not, it is relevant for this month. Therefore, it should be considered as expense. 60,000 expense, therefore retain earning decrease. If it has paid in cash, effect for cash decrease. But now it has not paid. Those are called accrual expense. Liability. We have to pay, not paid in cash. Therefore, other payable increase. Think about accrual expense, other payable increase. Paid or not, if it is relevant for this month, it should be considered as expense. Therefore, retain earning decrease as well as other payable increase. That is accrual expense. Think about transaction number 6. Think about transaction number 6. It has given donation 30,000 worth of donation. It has given 30,000 worth of goods. Here goods. 30,000 worth of goods and rupees 100,000 cash for flood affected family. It has given stock donation as well as cash donation. This one 100,000. Therefore, rupees 30,000 worth of goods and 100,000 cash for flood affected family. Donation, stock donation available. Think about stock donation 30,000 effect for stock decrease. Stock donation 30,000 effect for stock decrease, and cash donation effect for cash decrease 100,000. Donation is expense. If it is expense, it is effect for retained earning columns. Normally, it is effect for equity, but given equity separately. If it is given separately as a capital and return earning, under retained earning column should be recorded income and expense it effect. Think about transaction number 7. Rupees 8,000 building maintenance expense was paid. Any expense paid, it may be building maintenance, it may be telephone, it may be electricity, it may be salary, expense paid. Expense paid in cash, transaction number 7, building maintenance expense paid in cash. Therefore, it is effect for cash decrease. 80,000 paid in cash. As well as building maintenance expense is expense. Therefore, expense effect should be recorded, retained earning columns. If it has not paid, other payable increase. If it has paid in cash, cash decrease. Think what expense paid as well as expense not paid. Then transaction number 8, property, plant and equipment depreciation 25,000. Property, plant and equipment depreciation. Depreciation is expense. As a result of depreciation, property, plant and equipment decrease. Therefore, transaction number 8, effect for property, plant and equipment decrease 25,000, values in 1025, as well as depreciation also expense, therefore retain earning decrease. Retain earning. Think what depreciation also expense. If it is expense, if it is income, should be recorded under retain earning columns. Equity given separately. Then think about transaction number 9. Rent income received in cash 65,000. Rent income received in cash. Received in cash. Rent income. Therefore, effect for cash increase. Received. Cash increase values in 1065. And that is income. Rent income. Effect for equity increase, but given equity separately. Income and expense should be recorded under retained earning columns. As a result of income, retained earning also increase. Then think about last transaction 10th. Rupees 15,000 worth of stock was damaged due to fire. Damaged stock. Stock damage. Therefore, it is effect for stock. It is effect for stock. As a result of damage, effect for stock decrease 15,000. Values in 1015. And damage stock also expense. Therefore, expense should be recorded under retained earning columns. Therefore, retained earning also decrease as a damage stock. Damage stock is expense. Stock decrease as well as retained earning decrease. Try to recognize if it has given equity separately. If it has given equity as a one item, additional capital and drawings also should be recorded under equity column. Income and expense also should be recorded under equity columns. But think how to record if it has given separately. It has given asset also separately. If it has given asset separately, description no need to written. It has given property, plant, equipment, stock, trade, receivable, and cash separate. Therefore, try to recognize how to record transaction recorded in the accounting equation. Think what? It has given additional capital drawings, loan obtained, loan paid, expense not paid, expense paid, and donation. It has given cash donation, stock donation, as well as it has given damage stock, property, plant and equipment depreciation, as well as rent income received in cash. Any income, rent income, interest income, dividends income, commission income, any income received in cash, cash increase and retain earning increase. Very, very important. Think about if it has given separately equity as a capital and return earning. Try to recognize under capital column should be recorded what kind of information, as well as what kind of information should be recorded under retain earning columns.